everyone, Natalie Gauvreau here. I'm with Home Life Benchmark Realty, and we have Witt in the room with Fedewich and Witt.
Hello.
And we are here to educate our consumers, our clients, about the ever-changing landscape of the Strata condo insurance that's going on right now. And we are looking to support you, answer any questions that you might have, and give you some tips on what you can do to prevent future claims and keep yourself under huge premium and higher deductibles, which, as you know, are on the rise. So, Norm, why do you think insurance rates have gone up?
You know, that's a hard thing to answer. You know, I don't really know. Some of the reasons I've talked to several insurers that they think rates are going up. First of all, they've said that they have not had an increase or since 2003. I don't know if that pans out. Also, there has been some changes to the building codes where they now are building larger developments than they otherwise would.
Mm-hmm.
You know, it used to be you would get a sort of a 3 or the maximum a 5-story wood frame. They now in some municipalities are allowing 7-story wood frames, which just means a lot bigger building, more risk. If they have a large loss, and those types of things, insurers want to segment, and it may be hard to have one insurer cover the entire property. A lot of times they want to segment and have more than 1 or 2 insurers, just because if there was a total loss, they're not on the hook for the whole thing.
So that's what's kind of happening now. We had the big companies pulling out, and what brokers are now trying to bridge a variety of insurers and doing segmented insurance, right? And so that's why we're having some buildings without insurance, and some buildings are only getting 75% of the building insured, and you really have to talk to your own insurance broker, your homeowner's policy, to dig into what are you covered for. And we just wanted to share some of the information that we've been learning. I was at the CHOA, the Condominium Homeowners Association, earlier this month. This is February 2020, and the room was full of people that had questions, and it's really unprecedented times. You know, the companies are running at a loss, so they're recouping their money, and this is how it's happening. It's unfolding, unfortunately, in a very expensive way for some people. So the sense of the increases that we're looking at are, they're talking about 50%, 100%, up to 200, 300, 500% increases. That's huge. And the liability with the claims seems to be predominantly with the water, right?
Yeah, no, water. I was for those who don't know, I was a property manager for 15 years before I came a notary public. The number one loss is always water.
Right.
You know, if you don't have, especially if you're in an apartment style condo, it leaks from one unit to the other. If there's nobody in there to shut off the water right fast, I had one loss. It was a 33-story tower. It went down 27 stories. So, you know, that's the number one thing.
Yeah.
You want to make sure you know where your shutoffs are in your units.
Yeah.
And you want to make sure that your water hoses are in good repair, because that's by far the number one loss.
Yeah. And your hoses for your washer and dryer apparently can't be more than 5 years old. So if you haven't checked those since you've lived there, do the math. Check them anyway. Check your pipes.
Sure.
Check your caulking around your bathtubs. These are just normal maintenance that wear and tear. These things do deteriorate and need replacing or some kind of upgrade, right?
Right.
And then the other thing too is with these new projects, they're building really high-end finishings, and so premiums are higher because the developers are building what the consumer is looking for. And so if you've moved into a building and you find that there is some upgrades done, let's say to your unit that weren't developer oriented, then you need to make sure you've got coverage to replace that to the level that it's at now. So
yeah, that's a great point, Natalie. For those of you who don't know, condo insurance typically only covers the building as originally constructed by the developer.
Right.
So if they've added, if it's a resale, you're buying from an owner, a second owner, they've put in new flooring, new wallpaper, whatever, you need something called betterments and improvements coverage on your own personal contents.
Right.
Because typically the strata only really covers the building as originally constructed. There's lots of holes in the strata corporation's insurance policy. For those of you who are renting it out to other owners, if you have a total loss, they do not cover typically rental loss of rent for you. They do not cover relocation of your tenant, and they do not cover damage to your tenant's property. So
these are questions to ask your own provider.
Right.
And make sure you've got loss assessment.
Sure.
Say you got displaced and you had no home to live in because the restoration people are in your home.
Yeah.
These types of things can save you a lot of headache.
Exactly.
If you're displaced from your home, it could get expensive and you have no idea. It might take months to get some of this work repaired. I
had a fire in a building once, and it wasn't the unit that in question was consumed, but the units across from it, which did not have fire damage. They couldn't live in there because of smoke damage for 6 months. The fire marshal kicked them out or said they could not occupy the unit. They had no coverage on the strata building for relocation for rental of a new place because they couldn't live there for 6 months.
Right. And so I guess, does this affect homeowners as in not condo owners as well? Premiums are on the rise, I guess, all over.
I don't know about individual owners. I mean, what I've heard of strata owners, that's predominantly where I think of being hit. There could be, single family homes probably are being hit, but to a lesser extent, because there's not as much risk there because you're only covering one dwelling, as opposed to maybe with some of the newer buildings, there might be $150 million to replace it. So that's different from a $1 million home.
Right.
Far
the value
different
of your property and the cost to replace
Sure.
it, even the new developments that are coming up may or may not be able to get insurance, I'm told, from some of the people that I've been getting my information from. So it's kind of scary times.
Yeah, I mean, I wouldn't panic people.
Yeah, give an example of.
Well, we've, since this has happened, since January is predominantly when it started to happen, we've only really had 2 deals that were affected by this. One deal did complete a day after. They couldn't get insurance on the day of completion. It was a brand new development. The next day they got insurance, so that wasn't a huge problem. Another deal did collapse because on the date, an older building, and on the date of funding, we couldn't proceed with funding from the lender because the lender requires that you have valid insurance on the date of completion. They didn't have it, and the last time I talked to them, which was several weeks ago, they had talked to 5 insurers and still didn't have it. So I wouldn't be panicked. This is not at this point widespread.
Right.
During that period, we've probably done 100 deals, and really it's been one deal that has collapsed. So
we'll see a bit of a transition over the next 12 to 18 months while this thing gets sorted out.